Safaricom's revenue is at an all-time high, but profits have dropped nearly 40% from their peak. So what's really happening inside Kenya's most dominant telecom company? Is this a temporary dip or a structural shift investors should worry about? Today, we break down Safaricom's 2021 to 2025 financial performance, revenue, margins, ROE, cash flow, and earnings, and what it means going forward. So let's dive in. Let's start with the good news. Revenue grew from 264 billion in 2021 to 388 billion in 2025. That's an increase of over 47% in 5 years. This tells us Safaricom is still expanding, whether through mobile service, data growth, M-Pesa ecosystem expansion, or regional investment. From a top-line perspective, this is a strong performance. But investors don't buy revenue, they buy profit. And this is where the story changes. Now, let's look at the net profit. The net profit peaked in 2021 at 68.7 billion. Then we saw in 2022, it was at 67.5 billion. 2023, 52.5 billion. 2024, 42.7 billion. And 2025, 45.8 billion, a slight recovery. That's a significant drop from our peak levels. Now let's look at profit margins. In 2021, Safaricom kept 26% of every shilling as profit. By 2024, that dropped to 12.2%, and in 2025, it slightly improved to 12.3%. That's more than a 50% margin compression in 4 years. So what does that tell us? Either costs have increased significantly, investments are outweighing on profits, or expansion is temporarily reducing profitability. And we know revenue growth without profit growth means pressure somewhere in the system. Let's look at the operating profit. Operating profit tells us how the core business is performing before interest and taxes. The EBIT figures in 2021, Safaricom had 96.1 billion. In 2022, it was 108.1 billion. And 2023, it was 85 billion. 2024, it was 80.3 billion. 2025, it was 104 billion. We see a dip in 2023 and 2024, and then a strong rebound in 2025. That's 2025 recovery suggests operational efficiency may be improving again. If this trend continues, net profit could follow, and this is something long-term investors should watch closely. Now, let's talk about returns. ROE dropped from 48.9% in 2021 to 30.4% in 2024, then rebounded to 30.6% in 2025. Even at 34%, that's still strong by global standard, but it's lower than Safaricom historical dominance. ROA fell even more dramatically, 30.9% in 2021, down to 7 to 8% in 2024-2025. This suggests assets have grown significantly and likely due to infrastructure expansion, regional operations, network investments, and capital-heavy projects. The company is bigger, but returns per assets have reduced. That's typically during the expansion cycle. Let's check at earnings per share. In 2021, it was at 1.71, 2022, 1.74, 2023, 1.55, 2024, 1.57, and 2025, 1.74. Earnings per share has now returned to 2022 levels. That's a positive signal suggesting earning stabilization. For dividend investors, this matters because earning per share drives dividend sustainability. Here is where Safaricom truly shines. Operating cash flow in 2021 it was around 127.9 billion, and by 2025 it was at around 200.9 billion. That's a massive growth, and free cash flow also increased to nearly 90 billion. Cash flow is critical because it funds dividends, it reduces debt, it finances expansion, it protects the company during downturns. Even though profits dropped, cash generation is increasing. That's a strong sign of business resilience. Many companies report profits but struggle with cash. Safaricom is doing the opposite, and that's powerful. So, what's the overall conclusion after we have reviewed the revenue, the margins, returns, cash flow, and EPS? This looks like a company in a heavy investment phase. Short-term profitability has suffered, but long-term infrastructure and ecosystem expansion may pay off. The key question is, will margin recover as expansion stabilizes? If they do, profits could rise sharply again. If not, Safaricom may enter a lower margin era. I want to hear from you. Do you think Safaricom is still a long-term compounder, or facing structural margin decline, or fairly valued at current levels? Comment below, and if you want a full valuation breakdown including PE ratio, dividend yield, and fair value estimate, let me know. This is your home for deep Nairobi Security Exchange analysis. See you in the next one.